So, hello folks, and welcome back to our weekly forex commentary. And you know, it's the voice again. What a time, really. So, I don't know. I feel like talking a bit before we jump straight into the chat. And usually, I like to keep my video short. Even this one is gonna be short because it's pretty much straightforward. I think I'm gonna jump into the video. Okay. So here is dollar index. I mean, we're in a monthly time frame because and it's been a while since I uploaded charts or whatever stuff, and it's a new month apparently, barely down. I wanted to say barely 2 weeks, and we're literally 2 weeks past in this month. I mean, that's crazy. So we're 2 weeks into this month, and we're still you know talking dollar index, talking euro, yen, Aussie, etc. Okay, so if you look at this piece of price action, basically you would understand that dollar index has been in a range, right? And a market that is range bound is likely to the kind of market schematics or whatever you can call it. It's basically gonna be liquidity runs, right? And what I mean by liquidity runs, I'm talking about if you want to capture like a sort of sustained price movement in you know markets like this. You can see we've been within this range, primarily between say 99.50 and 107.50. Okay, and we've been stuck since say 23rd February, almost 2 years, because next year is going to be 2025, and this is almost 2 years of price action. Okay, and something I want you to notice is that whenever price runs like a liquidity pool somewhere, for example here, relatively equal lows, and it had like a sustained price move for about say 3 months, right? And when we ran above these highs here into this fair value gap here, there was sort of some sustained move for about 2 months, say 3 months. Now, this price run is what you can call the quarterly shift, right? And basically, quarterly shift in market is basically markets trading in a particular direction for, let's say, 2 to 3 months on the average. Okay, it could be 4 months, because we have how many months? We have 3 months, right, in a quarter. Yeah, I think we have 3 months in a quarter. The year is 12 months, and one quarter is gonna be 3 months, so we have 4 quarters. All right. So that's primarily quarterly shift. And when you're discussing quarterly shift, basic tools you want to look at is you want to look at these liquidity pools first. You want to look at your technical analysis, and you want to blend it in with the macro data. And macro data, one of the macro data I'm always talking about is the COT hedging program. It's something that Michael has taught. It's something that you can learn easily on your own. I mean, um, personally, it was a breakthrough moment for me, and I recall teaching community as soon as I figured out what Michael was saying about the COT hedging program, right? Because it's a very beautiful concept. It gives you real time commercial buying or selling in the marketplace, and if you can do analysis and this overlaps this hedging program, that's a that's a that would be a solid analysis. I don't want to speak too much grammar and all of those things in between, right? So um, that being said, we are in the current market price. I mean, um, we took out sell side here, and we've been seeing market expand. Now, someone would say, um, how do you anticipate levels like this? I mean, this is the thing. If this is a Tory soup, it means there's a likelihood that this swing point here is high res. Okay, what I mean by high res, I mean high resistance, and you know, high resistance primarily are major key levels, swing high, swing lows, and levels that ought to hold primarily for efficient market structure. Okay, something like that, and market goes through them. Now, when market goes through levels like this, um, they tend to reverse back. I mean, if you look at this level here, this is a low, traded below this low, ran through, trade above this high. What they call this level commonly would be protected low. Okay, I call it high res because Michael calls it talks about high resistance, liquidity runs, and all of that. And from there, I was able to understand swing points at high resistance. Okay, and for you to determine a level that's high resistance, primarily there has to be like a transaction between opposing liquidity pools. And what I mean by opposing liquidity pools, I'm talking about market run through sell side, sell stops, and market run above buy side, buy stops. So there's been a transaction between the sell side here and buy side here. Okay, and that makes this level a high resistance. So, and primarily, and when you have a high resistance swing point, when market returns back into the level, right? Like the way you see prices return back into this rejection block here, because we have long wicks here. If we had small body like this auto block here, it would have been your OB, but since we have long wicks, markets likely to walk the rejection block. Okay, and if that be the case, you'll be anticipating prices to return back into this level, but not anticipating prices to run through this level. And that's why last year, towards December trading, I was talking about how the monthly low could form here. Okay, I wasn't expecting a run through this level. That was in December, right? Because I know for a fact that this level is high risk, and the market is going to find it very, very difficult. Now look at all of the momentum prices to get to this level, and as soon as the monthly candle closed, January opened bullish and was bullish. Okay, so that's one of the techniques you can use in framing target, objective, and even framing your high time from buys, because when prices are returning back into this level, we are seeing the macro data align for the dollar index to be bullish. Okay, so you can imagine we're at a monthly discount, right? And we're seeing data support that dollar index is bullish. Now, I just talked about one method through which you can determine um, high resistance swing point. Now, another technique is there are certain levels associated with inefficiencies, fair value gaps, and all of that. Okay, now these levels associated with inefficiencies, fair value gap, etc. They are also high risk. I know most people in the ICD community know about the inversion technique, right? And there's actually a way I utilize, the inversion technique in quotes to determine levels that prices could actually turtle soup. Okay, because the reason why inversion is solid is because what's inversion? Basically, a PDRA, a fair value gap, an inefficiency in quote, switching um, obligation or allegiance. Okay, for example, look at this very fair value gap. You can see prices rejected here. So when we're looking for longs, we're looking for short-term objective here because we know this is a premium and this is a fair value gap, and it could offer a near-term resistance, right? So, and we saw near-term resistance into this OB. If you can look back on March, you can find the first video I did in March earlier this year. I was calling this low here for objective into this OB, not this low. Okay, and that's how to really do analysis, because at that point in time in March, um, the macro data was still supporting dollar to be bullish. But then I understand PDA raise, I understand premium and discount, I understand the underlying higher time from institutional order flow. So all of this in quotes, when I look at all of this data and I look at the chart, it helps me really interpret, okay, managing my expectations especially, right? Because most folks don't actually know how to manage expectations. They don't know when to expect more. They don't know when to cut the expectation less or lower everything altogether, right? So, um, as soon as price, traded below here, closed within this week, then we knew it was bullish, and we had this month here run through this fair value gap. The only thing was we never ran through this high here. Now, recall the lesson I said. Why is levels are high res, and how markets find it very difficult to trade to those levels. When I said there was a transaction between sell side here and buy side here, that also applies to rejection blocks. Okay, meaning you treat rejection blocks like you treat old highs and lows. So when prices trade into rejection block, they are basically running the sell side here, resting at the bodies. Okay, I'm not going to go into details about that. You can do more research on ICT and all of that. Or probably when I'm starting my YouTube channel, I'm going to be treating all of these concepts independently, right? So it's going to be a long list of videos, but I'm going to first drop in, like a playlist, sort of like a mentorship type thing. So if you just want to go straight to, okay, what do I need to start trading? You get it. But if you want knowledge, don't worry. There's a lot from where it's coming from. Okay, so this level now, we had a transaction above this buy side and transaction at the rejection block. So this high here itself is high risk. But at a point in time, the markets were still bullish, and we wanted to see prices going to run higher. I need to confirm. I think my OBS is still running. Okay, so that's why, regardless, I was still thinking of higher dollar prices, and we kind of like expected this down move, yada 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 yada, and we later flipped, and we said DXY was bullish on this month. I'm sorry, bearish on this month, and wanted to see sell side here and potentially here. But first, our objective was here. So now we are back in this price action, and what I wanted to say about swing point associated with fair value gaps, because when prices invert levels like this, just like the way it was inverted, you can see this fair value gap. If you extend it forward, prices closed through it. Okay, when you see levels like this and you watch their swing points like here or here, okay, we'll take here for reference, because you're going to find price action where you don't have this in between. So just for universality sake, okay, because one of the good things about very good concepts is they're very universal, works on all markets, there is no exception and all of that. So that's a very good concept. So when you see levels like this, fair value gaps that we inverted, primarily you want to see them return back into the gap and utilize it for support. So that's what they did here. Return into the gap, traded below this candle that traded into the gap, tried to find strength or failure swing and declined, right? So when this gap fails and prices happen to trade below its swing point, because even if this gap fails, the order block here was supposed to hold, but by then the high time from order flow was bearish on dollar index, and we wanted to see prices just outrightly run this low. But while prices traded into here, which is apparently a pit stop, like I would always say, when you trade into a high time from objective, you wanna wait, okay? you want to wait, you want to see market structure, you want to give your time to process price action. Okay, because especially when you are in a market profile where a run on liquidity is very very significant. I mean, you could see a quarterly shift in market. So I don't expect you to always be hasty to have the next prognostication about price action and stuff. So we're back with current price action, and you can see how we've been able to internalize all of these things. And not just that, it's for a fact that all of these moves were called on my Twitter account, and this is just the logic behind. Now, going forward, dollar index on the monthly time frame, you'd see that we still have this same. Um, okay, I'm looking. What's my? I've forgotten my shortcut for my rectangle tool. Okay. All right. So you notice here that after last month closed, I'm sure whoever has been trading here must have spotted this already. You see that we had this fair value gap here, and markets effectively closed through it. Now, if you look at all of this cluster here, this bearish shadow block, sorry, this bullish shadow block, bearish shadow block, bullish shadow block, all of this consolidation here. Okay, we're expecting the markets to run through here and eventually run through here. Okay, because previously we could not see prices run through here. So what this move did was mitigating this level here, making it low resistance liquidity runs. Okay, that's what it did, basically making it low rise. So the next time prices will be revisiting this level here, we're expecting a run through this level. Okay, so basically my expectation long term is for dollar index to reach the 108 level, right? We want to see prices run through here and here, but that essentially is not my concern, because that's future PA, and we have to deal with this week's price action. And what's this week's price action? Well, we're already coming off of a monthly support level, which is this old fair value gap here, which is already acting as support. Clearly, we're still trading above last month's high. And if we check the weekly time frame, okay, if we check the weekly time frame, we'd see literally the same thing. I talked about swing points associated with an inefficiency, and you look closely here, you can see this candle here from this low to this high. If you, overlay it on the forward time frame, you'd see the range on the forward chart. You'd see that this candle by itself on the weekly time frame closed this fair value gap here. And what did I say about fair value gaps that that flips allegiance? They call them the inverse fair value gap, meaning your next expectations for prices to make a retest, which this candle did, and primarily just continue. But it made a retest and prices ran through this low here into this fair value gap. Now, what's this low? Let me take this away. Okay, recall this swing point here is associated with this fair value gap here. Okay, now you can see how to anticipate it also, because if order flow is bullish and you have a level that's high risk, why is it high risk? It flipped this fair value gap here. This swing point here was associated with this fair value gap. So if prices run through this level primarily is supposed to hold for support, meaning it's okay for prices to return into the range of this candle, but it's not okay for prices to run this low. But when that happens into a high time frame PD array, you can expect, it to be totally super. Okay. So basically prices did that and closed above this fair value gap. So we have an outright bullish price action on the weekly time frame. You can disregard the week because it's only respecting a much more premium gap. So you can see how it's going from one premium level to the next. This one had to close this gap, then this traded into this fair value gap, had reaction, returned back into the range. This traded into sell side, okay, high res, Tory soup, returned back, continued bullish, met another resistance here, rejected. Now it's settled above this fair value gap, and that's the major detail I want you to look at. Okay, so now what we're having this week now is potential bullishness on the XY, and that's what I want to focus on: bullishness, bullishness on the XY, and it's how I'm going to interpret it on the daily time frame. I think that really, that would really matter. Okay, so on the daily chart, we have the breaker here. You can see this up candle here prior to the run below sell side here. Okay, that's the breaker. Although we have some tiny bit this inefficiency here occurs, the market essentially opened on dollar index. That was on the election ninth, US election ninth. I think afternoon ninth. It was midnight here, anyways. So we have this gap, and prices never return here. They don't always have to return here, at least on the near term. Okay, and looking at how Friday closed, okay, Friday still closed above the weekly gap. So we are currently above support here and support here. So we are likely to see a continuation. But before I can go in looking for continuation primarily, I'd have to see how a Bay of London session trades, or I'd have to see if dollar index utilizes, maybe let's check the 4 hour time frame, maybe there's a 4 hour level, something that prices could trade into. Previously I was thinking that we could see them return into this 4 hour gap, but that did not happen. So whatever price action we're going to get today, or whatever price action to trade, I don't know what it is yet. Okay, you can see we have this breaker here, all of these up candles prior to this move lower, that's the breaker. Okay, that's the breaker, and we even have a lower breaker here. Okay, this 4 hour breaker, but I don't know if the markets would actually return back into the breaker, because this is the daily time frame breaker, and I'd always favor the high time frame levels over the lower time frame. Okay, that's one way to manage your expectations. Okay, if you're looking for levels you want to trade off of, you'd always want to validate the high time frame levels first before the lower time frame, because most folks are always much more comfortable with the lower time frame because of risk and everything. And the market really isn't about you, isn't really about what you want. Okay, it's always the higher time frame. It supersedes the lower time frame period. There's no explanation. There's no convincing to that. It's just fact. Okay. So really, there's nothing really here I can use in spotting. Okay, this is where I'm gonna go in and stuff. Okay, I just have to sit down and watch. Most likely gonna sit through another session to watch how prices is gonna unfold. Okay, so that's basically details about analysis on DXY, and one price action I'll be looking forward to later this week. Okay, to completely dispel any thoughts that we might be returning back here, is a bullish close above Friday and Thursday's high, so we can validate this as a down candle and our um, bullish order block, right? And that would just be beautiful because if we have an order block very close to levels, you know, like this, okay, you know, we have a short-term trade on our hands. And transposing all of the idea on Euro USD. Okay, so transposing all of those ideas on Euro USD, you'd see Euro USD we had a bearish week, ran through buy side here, and you can see the body is telling the story that Euro is um, bearish. I mean, um, no questions asked if probably she's going to return into this gap for now because everything is leaning on sell side. Okay, because it will be much more difficult for Euro USD to trade into buy side here than to reach for sell side at this lows here. Okay, look at what I was saying, talking about when we were speaking high res. You can see the swing point trade through sell side here, and this high we read a buy side here. So when you're returning back into the range, what would you expect? Exactly. So if you say prices is unlikely to run through this level, you're very very correct. And now if prices are returning back into this level and macro data is supporting that Euro US is bullish, what do you see? So basically everything we said in the XY, we're going to like transpose it on Euro, and that's how we are internalizing price action for the week. Well, GU is a bit weird because I look at GU2 on the side, and GU has some clean highs here, and if you're watching what these levels are here, basically some monthly the monthly bearish order block. Okay, I had the consequent encroachment and the open of the bearish order block marked, and we didn't exactly trade into those levels. And now on the weekly time frame we have clean highs here, which is kind of like suspicious, but I really don't know how G is going to trade. G doesn't look clear, but gone to my head, I'd prefer, we have a sharp run through this level, and then when we are returning back, because it's going to be a torus, so definitely if we can run through these highs, and I want to see the bearish body close strongly below these two candles, because what's this, I won't be trading GU anyways. I'll stick with EU on weekly chart. We have distinct levels here, like the weekly bearish order block, but do I think they'll trade into the bearish order block? I don't think so. I don't know. I don't think so, because we have a daily bearish order block here. So and since we're bearish, we want to respect the PDRs in order of priority, right? So that's why I'm going to do a little bit of watching today, especially London. Today's Monday, and I'll see how it trades, and I can frame my setup for New York and subsequent trading days. So if you found this one insightful, kindly share with friends, repost, share with the community, let everyone see this video. I did lots of teaching here, here and there. I miss it. So in the meantime, folks, be safe.